Good morning, good Monday morning. Quick sound check, please, and then we'll roll. Okay, thank you. All right, so here's the situation. Relatively straightforward. It was, and forgive the lines when I do this, but it was a pretty good close. People will want to call this a tail candle. It's a pretty good close on Friday, considering where the market was early in the day. They recovered. Maybe this is a sign / signal of a trend change, but basically you have to defer, and I'll do this tonight. You have to defer to the weekly chart. What's wrong here? Nothing. Okay, so just take that for what it's worth right now. And remember the inverse head and shoulders pattern. Remember, weird stuff happens during options expiration week. Remember, we're in an uptrend. The trend is your friend until it's not. Remember, it's a buy the dip scenario until it's not. So remember all those things, and the inverse head and shoulders completion is somewhere around 420, maybe north of 420. Okay, could even be higher, but there's important stuff up there. So we talk about that in the video, and I'll do that again tonight too. So just kind of keep all this stuff in mind as we go forward, and we're in the buy the dip camp. Okay, that's just the way it is. Where is that? Spike of 412 down to 411.15. That's the first crack this morning. That is a area where they should bounce back in the other direction for a scalp with potential. There's no short right now. If they pop them up a little bit, I'm not interested in a short because they're not trading up enough right now to short the market. If they spike up later, that may change. But as it stands now, we're looking for a buy the dip. All right, that's basically it. Got some stocks on the move. Jordan will be on those. A couple of banks on the board, at least one, I think. Hold on a second. Two. Forgot to put the second one on my secret list. All right. So be wary of the banks. If you're going to trade the banks, which is State Street and the Northern Trust, you know, the banks, they could travel a little bit farther than you might think, but the numbers are the numbers. And I gave you the numbers far enough away where if they're really getting killed, those are the numbers. So, you know, I took that into account. I'm not going to trade the nearby numbers in the banks because they could pull the rug out. So I've already accounted for that. Yeah, I talked about that as the Armand. I talked about that in a video a while ago, and I titled it The Next Shoe to Drop. I'm familiar with that market. I just had a conversation with a friend of mine who's been in that market for 40 years. And, you know, basically the net is commercial real estate market we're talking about. We have a second here. The net is that those loans are short-term loans. And when interest rates rise and the value of properties decline, that's a recipe for a write-down in revenue, some way, shape, or form. And a lot of stuff will happen when that happens. Banks maybe repossess a property, maybe write down a loan. Either way, somebody's going to lose. So was my next shoe to drop. So thanks for bringing that up, Armand. It's a good point. Transports report tonight. That's interesting. It's good to know. All right, we got about half a minute or so to post time. I'm not expecting a wild open. You can get the unexpected, but I'm not expecting a wild open. That's just an opinion. All right, we'll let them trade out for a few moments. If they come down to 412, spike of 412, that's the beginning of showtime. And they're off. 412.35 is considered a pivot, but it's not a buyable or sellable point right now because you just don't know which way they're going to go. If they do one thing, something else should happen, but we don't know. They'll do the if, meaning if they come down to, let's say, 411.90, which is the place, spike of 412, if they should begin that getting into that area for a bounce back in the other direction, but we don't know they will. And that's why, that's the way the thinking works. Because some of you will say, well, why don't we just short it down to 412? Well, because you don't know that they will get there. So they filled the gap. Okay. Garden variety stuff.
Wolf and State Street are right up to the levels. State Street actually just bounced pennies before it. Wolf just pierced the first level, as did Northern Trust.
All right, let's take a look. Where's the thing? There it is. All right, just be careful with these. Tight leash. Stop was relatively close by considering the numbers. All right, so I think Wolf might have given it to you already. I'm not sure. Jordan, did they give it to you yet?
Yeah, it got 50 cents off. Whether you could get it fill or not.
Okay, I'm just curious. Yeah,
Very
okay.
widespread.
Let's go back to the other one.
Northern Trust is at the second level now.
Yeah.
The Wolf's definitely at a base hit now.
Yeah, I should say this earlier. Raf brings up not for option traders. Oh, Kevin took Wolf. Nice job, Kevin. Yeah, this thing's a problem. See where they can't get below here. That's the bottom line. Yeah, it's a daily number, but on close, you just don't even want them to start closing candles down there. They can test it, but you don't want them closing down there. There's spiders for a second. So they're trying to push up, obviously. Just see what happens. Give it some time. 413.45 is the first number of interest where they should run into overhead resistance. They could react there. It's an aggressive trade, and I'm not interested in a short for what it's worth. Just getting a look. For those traders looking for a scalp, it's a reasonable place. 413.50, 45, 40, 60, 65 in that zone. It's a reasonable place if they got there sooner than later. If you want that trade, that's a trader's choice type of situation. Is this thing halted? No. Dark took Wolf. Nice job. If 413.45 is a target for anybody that would have been long for your own reason, that's fine. It's a target for an exit. It's a magnetic place. You know, let's keep everything in perspective real quick. The S&P is up 3 points for the day. Okay. Just so we understand what's going on. It's a quiet tape. They're going to run away? Probably not. They're going to bounce around for a while, go up and down, trade in a range today. It's possible. It's a good possibility. Just understand the tape we're in at present. If it changes. But this is what it is right now. Nice job, Kevin. Real nice. $1,000 on Wolf. Nice way to start the week. A nice day in the first 10-minute candle. That's really a good feeling. Yeah, I think you might have stuck the low for at least for a while. The volume is indicating that on Wolf. Right now it is. See that? Decreasing volume is unlikely to come down. You're going to have to come down on volume like this again. 413.45. That's really where they're trying to get to. Sometimes they come up short, other times they spike them through. Just awareness. I don't know about the sellers being tired, but they may be done. Same thing. I mean, this is the way I look at it. Like maybe they're finished. Maybe that was it. Maybe it wasn't really the sellers in that sense of the conversation, the concept, but maybe it was just going to run a test of a number. How can I not look at it like that? Sellers were done at the number. Okay. We could say that. Talking about Wolf. Kevin made a nice profit on Wolf. We're talking about buying it lower, and I said they'd have to come down on heavier volume. That was the conversation. Sorry, I should have read the question. What's going on over here? Oh, they missed the number. I'm trying to find support. Similar concept to the volume. Yeah, we'll see what happens in this candle. Dropping, but not a lot. Just one way to read the volume. There's variations of how you can read volume. Yeah, that's a good spot. Transports are nicely up on the day. IWM's nicely up on the day. I saw that earlier. I just didn't say it. That was part of my buy the dip concept. It's a good question. Daniel asks, is a pivot a good place to buy if they came down to run a test of it? And it may be, but you'd have to be willing to buy lower because I can't say that they bounce at the pivot, but I could say there's more likely chance they'll bounce at the number of, below 412. That's the way I have to read that. It's almost like a coin toss. Well, it depends on where your average is. Like if your average is the two numbers, so your average is in the middle, Mark's asking what the exit is. If your average is over here, 81, that's your, okay. Well, then you're going to look to, I mean, they should get back to the first number, but you don't have to wait. You should take something off at the normal, just say 82 and a half. Okay, up here, 82 and a half, maybe a little higher. And then you hold because they really should get back to the first number. Nice trade, Mark. It's very difficult because there's nothing to go on intraday. So you have to lean on the fact that when they bounce, they generally give you the 1%. That's where that comes from. It's not rocket science. I've done the math. Sometimes a little less, sometimes a little more, but they generally give you the 1% on these trades. Yeah, great job, Mark. You should be out of something. Yeah, that's fine because you should have kept the position size small on Northern Trust and State Street if you got into Straight Street, or if you would have got into Straight Street, based on what I said, excuse me, with about the banks. They're a little bit of an outlier when they're getting killed right at the open because you're not sure. So I gave you the lower numbers. Average 10-minute candle, high or low? Well, I would say not necessarily at the open because of the volatility, expansion of volatility and the percentage that they're down. I mean, I don't know. Maybe you've done the math. Maybe it works. I've never looked at it that way. I don't know what a 10-minute candle would have to do with a stock that's down like 8 or 9% on the day, right at the open. So they're coming back to the pivot, and we'll see how good of a pivot it is. It's a really aggressive buy, only because I just don't even have a good reason why. I just think it's an aggressive buy. I don't really have anything other than, if, down 3 points on the day, you got to let them pull back a little bit in order to get a trade out of it. They're just going back and forth 3 points. That's not a good enough reason for me. Didn't even get there yet. That's fine, Jay. Nice job. Jay took the long off the pivot earlier, meaning he said, hey, look, if they get above, they're going to go somewhere else. And he took the chance. He knew it was aggressive. He said it, but nice trade. He got 6 points. So we got some winners in Wolf. We got a winner in the S&P on his own. A few more out there. Probably got someone that tried to buy it on the way up and got a pie in the face. I'm sure we have a couple of those. Any day is good to trade if you have the numbers and the market's moving. That's all I can say, Daniel. You don't know what's going to be a range day until after the fact, really. That's why we took profit here at 82.5, because it was natural resistance, even though it's very hard to prove out that point, but just stick with me. Yeah. The question is, can you explain the meaning of a pivot when you refer to that in the S&P? And when I create in my analysis in the morning a pivot, what I'm saying is the market is more prone to be bullish and push up above this number, and it's going to find resistance if below this number, and it's more prone to go to the next number below. And the pivot is my early morning place that the market is going to either be where the bulls are in control or the bears are in control for the next number, either above or below. So right now, above the pivot, the bulls are in control for that 413.45, regardless of how they get there. That's the point. And if they get below 412.35, then the bears are in control to get it down to the next place, which is, we'll just say 411.90, give or take. Okay. Yeah, the S&P was going up or down 3 points. 3 points. Like the S&P goes up a point, down a point, up 2 points, 10 points. S&P 500, it equals 10 cents in the SPY. So 30 cents is 3 points. SPY 30 cents, 3 points S&P. Or ES, which is the S&P E-mini futures. 3 points in here equals 30 cents in here. Is that clear now, Mika? Okay. If that was real foreign to you, you're probably relatively new, and I wouldn't do anything. I would just watch for a while if I'm right on that. Eric, nice job on Northern Trust. 400 bones. Like it. Oh, yeah. Mike's asking a question. Who's doing the automatically triggered order system stuff, MES? Actually, Mike, I tell you what, you can go to Jordan on that. Just email Jordan. Jordan at My Strategic Forecast. He's proficient in that stuff. Jordan doesn't mind. See, one way or the other, above here, they're going to get to here. Below, here. That's it. Oh yeah, Don does the conditional MES orders using the SPY as a reference point. It's okay. Mike, email me again. Don, please email me. Can I put you guys together if Don doesn't mind? I just want Mike to be able to ask you a few questions. And if you're willing to be put together with Mike, then I'll do it. Yeah. Thanks, Don. Mike, email me and I'll give you Don's email address and his phone number. Thanks, Don. All right, Mike, you're all square. Thanks, Don. By the way, I was corrected. I don't know if that person's in the room or not, but I was corrected from an inside the number member one way or the other that final day to pay taxes is tomorrow, not today. I wrote it in the thing. Thought it was today. Well, it's tomorrow. Doesn't matter. But I appreciate the correction. When you're wrong, you're wrong. So Northern Trust now, for anybody that bought first and second number, I just did, they get back to the first number. That's it. This trade's over. Nice job. Sometimes they take time. Qs are a little weak. Look at the difference in the charts. That's interesting. And plus the semis were down earlier, pre-market. They're still down. Had the IWM up, the semis down. Yeah, it was kind of a wash. Then you don't know what the transports are doing because you can't tell in the pre-market. I can't anyway. Yep, the transports are still up half a percent. This is your pivot in the Qs. Kind of obvious by now, right? Market eats some time off the clock, even if it's a 5-minute chart. It's just a concept. Doesn't matter. I'm looking at a weekly chart or a 5-minute. Each candle is just representative of the time frame. So they're eating some time off the clock. They fail. They come back. They try and rally, but they're still coming down to that same place where they ate time off the clock because it's important. So there's the pivot. Fail again or try and rally again. They're in the middle. You don't know. Oh, nice little drop. Back to the pivot. See that? Look at that test. Oh, look at that. You think that pivot's important? Yeah. Pretty interesting test of that pivot. See how fast that was? That was absolutely a test. That's just the way you read that. That's the way I read it. I just did, Anishan. I explained the whole thing. Bulls are in control above, bears are in control below. It's the place that turns the market bullish or bearish. It's not necessarily always the flat line. I don't know what S1 is, but nice job, Craig. I'm not sure why you would have done that, though. Why not just, if you're going to make a trade, why not buy the thing we're looking at with the numbers we're looking at? Why would you buy something else? Because markets are not correlated. Just saying. I'm trying to teach you. And I'm going to do that your first day here. That's great. But I'm going to try and teach you. If I think you did something that you could do better, I'm going to tell you. Stay with me. I'm teaching you. I'm not yelling at you. Because it's my number, Anishan. That's a secret. Okay. That's fine. It's just understand what I said and the reason I said it. Because we're nothing to say that the Qs couldn't have leaked lower and the spiders bounced at the same time for minutes, right? So then you think you're wrong. And you know, if the spiders are going to go up, if the spiders are going to go up $2 today, then Qs are going to be up too. Okay, it's normally what's going to happen. But in the heat of the moment, not necessarily. And I'm just saying that when we're looking at a market with a number for a reason, your better odds are to actually use that vehicle or one of the vehicles that tracks that stuff. That's what I'm saying. Mike bought the pivot. I know some of you buy the pivot, and that's fine. I just thought it was a 50-50, and I would have rather, from a business trading perspective, bought lower. But I understand what you did, and if you believe in the pivot, which you do, then you did right. It's okay. Because you also were willing to buy lower because I said it ahead of time. There you go, Mike. Exactly. 217 and a quarter to 218.50, give or take, or I should say to 1955. In other words, 217 and a quarter is overhead resistance in First Solar. But if you're asking for a short, I would say no. If you're asking for an exit, I would say yes. It's in an uptrend, eating time off the clock on a weekly chart in like a bullish kind of thing going on. I'll bring it up and I'll show you. All right, so here's First Solar, and I'm looking at this, and I'm saying, what are you shorting? The highs? For what? There's no reason, right? It's just eating time off the clock, trying to get higher. That's not a good short. There you go, Raf. That's the way you look at it. Now look at this market. This is just bouncing around, a few points here, a few points there, S&P points. You know, it's not a big deal. 50 cents here, 50 cents there. That's so far a range-bound market. Spiky little market, even though it's quiet. I'll be back in 30 seconds. Now you don't buy the pivot again. That's a one-time opportunity. Even though they may bounce off of it, it's not the same trade, even if it was a trade or it wasn't. It's not the same anymore. But if they come down to a spike of 412, there's a trade there still. Test the pivot. So now we know it's the pivot, or we have confirmation in my mind. I had already explained that, Jerome, and basically it was if they got to 413.45 back here, you were probably going to get a reaction in the other direction. I said traders could short that if they did it, but now it's different. They've already been up there a couple times, tried it, came close enough to where I'm not going to do it. I'm not going to suggest it. So there's no short right now. You're in a buy the dip market, Jerome. We said that early on. You probably weren't here early. My guess is you joined late today. That's okay. So what are they doing? Not that one. That one. What are they doing? Nothing. They're eating time off the clock. Going back and forth. Here. That's it. Stay above here, and that's what they're doing, and they'll move higher. Can't say they'll stop here at this point. It might go higher. You know, maybe this is a quiet trending day up a little bit, finish positive. Maybe it's a range bound day, finishes negative. We don't know. Don't try and guess. We don't know. What we do know is they come down to a spike of 412, there's still a buy in there because they'll bounce up again. Doesn't look like it at the time, doesn't feel like it at the time, you don't believe it at the time, but that's the trade. We need to change our thinking, how we think about things. If they come down there, they're running a test of something. And once they run a test of something, they're usually finished with that thing and they're going to either eat some time off the clock and go to the next thing, or they're going to bounce back in the other direction. Same as stocks on the move. Don't think, Jerome. I never said anything changed, so there's nothing to think that it would. I'm helping you. I'm not yelling at you. You know that. Don't think. Once you start thinking about all kinds of things that might give you your own private indication that something is happening, but it's not happening, then you're making up stuff in your mind, and you have to try and change that thinking. Got to rewire ourselves to know when we're trying to justify something, saying, whatever it is. I'm not saying this specific question, just this is more general about rewiring our thinking. I talk about it all the time. I'm your alter ego, remember. So when we change our thinking and how the market works, then you start to understand what it's doing, why it's doing it, and then where the opportunity is. And then where it's not, because something else happened. Like, for example, back to this question is 413.45 a short anymore? No, because they tried it twice, they pulled back, they keep bouncing at the pivot. So my concept is they're just eating time off the clock, and maybe they're eating time off the clock to go there, but maybe higher, and a maybe isn't really good enough anymore. But early on in the first candle, for example, or first one that went up there over here, okay, in the first 10 or 15 minutes of the day, first 10 minutes, whatever it was, that was different because that would have been the first run up and the first time best time applies. Now it's not anymore. That's why. And just rewire our thinking. It's probably correct, Craig. Yeah. But that doesn't mean one will get to the other. Like if the spiders get to 411.90, are the Qs going to get to 316.85? I don't know. But it's most likely the corresponding, at least this zone is corresponding to somewhere down here, yes. And you should see that happen. If the spiders fell, the Qs will fall. They're already weaker. Look at the difference in the chart, and even in this 15-minute to 15-minute comparison. So you could see that. It's just right there in front of you. Yeah. Oh, by the way, Eric says it best. We're waiting on the numbers. So yeah, that's where the patience comes in. Alter ego stuff. Put on your alter ego hat. I'm the alter ego. We're waiting on something to happen. We're not going to guess that it will happen. We're waiting on it to happen. Big difference. Rewire the thinking. Don't overtrade. Don't guess. Don't self-justify. Don't make up trades. Just take the ones we're talking about. Now, the ones that were taken early on, like we had a couple long traders that rode it up a little bit, they are more experienced maybe than you might be, at least in here and how this works. So anybody that would have bought the pivot before knew the risk, and they knew where the next number was, and they were willing to take that risk for 45, 50 cents, whatever it was, at least from the top end of the zone. But they understand how the pivot works and they believe in the pivot. So as you stay here longer, if you do, then you'll be in a situation where you have a better understanding of everything I'm talking about, more so than you do today. And things will become more clear that you're not even hearing right now. Doesn't register yet. There's no secrets. There's just things we don't know yet. Right, for all those reasons I just described. Correct. You're correct. Point of reference one more time, again, just to get a sense for what's actually happening, which is nothing. The spiders, the S&P is flat on the day, flat as a pancake, flat. It's not up, it's not down. It's down less than a point at present. That could change, there it is. It's positive by quarter point. It's flat. There's nothing to do with flat. Market has to move to create a trading opportunity. Could you buy the market saying, well, as long as they stay above the pivot, they're going to move higher? You can, as long as you fully understand that 5 minutes from now, they could be below the pivot. The longer they stay above the pivot, the more chance you have that they will move higher, but you're not guaranteed they will stay above the pivot. That's the trick. That's the risk. It's a risk reward. That's the business. This is a risk business. How much risk are you willing to take to be in business each and every day? Hey, like them apples. Taking an opportunity to do some other stuff while the market does nothing. You can put some questions in, we'll answer them, we'll look at whatever you want. I'm going to play Sally, the customer service rep, for a moment and answer some emails. So this is called Nothing Burger Market. That's a technical term. AMD and Mickeysoft. Okay, let's look at AMD first. All right, so let's see what we got. The first thing I see on the weekly chart is a big time up candle. So we know that even though this is far away, you get below here and it's curtains, right? That's number one. That's a weekly chart, but that's a big picture stuff. You see where I'm looking at, right? You look at this. The daily chart, breakup candle low. Why is that important? And whether it's to the penny or not, it doesn't matter. It's a spike of 89 down in here. Why? Because market ran up to here. Market told you that price is important, so we're going to get rejected. Rejects price. They come all the way down. I do this every day. And then they come up and they break up above this, and it looks like they're running away. They get to $100, which is a big fat round number. All right, $100 more. And then they get rejected at $100, a big fat round number. They're just going concept, right? This is logical stuff. This is common sense market analysis. This is not, why did they get to 100 because the square root of the vector? Nah, none of that stuff. Just a concept. So now they're coming back down to do what? Retest a breakout area. And oh, by the way, just so happens to be a huge breakup candle low down here. So you think, and this is the low, all right? $89, 89.02, it's 89, right? Plus or minus 89 is going to be, and same area, right? It's within pennies. Plus or minus 89. Do you think the market's going to find support? Even if it gets below, is it going to try and get back there? And the answer is, yeah, that's a support area. So maybe today was low enough. Maybe it wasn't. Maybe tomorrow they do it, but that's the area. That's AMD. All right. It's a good little lesson in AMD. All right. Any issues with Mickeysoft? Other than the fact that they're trying to get through this area, right? And here's the deal. Forget this is a weekly chart. It doesn't matter. It's the concept of what's going on. All right. If this was a 5-minute chart, I'd say the same exact thing. It makes no difference. It would be an intraday conversation, but it's the same conversation. So here's the situation. They're trying to get through this area. What's important about that area? Same routine. Market ran up there and got rejected. Boom. So now, whether they can or they can't, we don't know. But if they stick around here, then they're eating time off the clock to get above that area. That's it. And if they get rejected back down, well, it's something different. Well, I use the volume in a number of different ways, Jay. And there's nothing going on in UNG, Gerardo. There's nothing to talk about. It's just dead for now. They'll rally it at some point, but for now it's dead. Where was I? Jay. How do you interpret the volume? Okay. So there's a lot of different ways. So let's give you some of the ways. All right. So let's just say, let's go to a daily chart. We have nothing going on in volume, right? We have stagnant volume, all right, maybe even slightly decreasing volume, and the market goes up. And everybody always asks me, I get emails about this every single week. I get comments under a video, or I get emails, or both, or whatever it is, every single week. Aren't you concerned with the light volume? Why would I be concerned with the light volume? Light volume just means that there's no extracurricular activity in terms of institutional participation. Meaning if the institutions are going to flood the market and buy up the market, all right, flood the market with money and buy up stock, and it's going to do it at a greater pace like this green candle here than most others, or these three green candles, if they're going to do that, then that tells you something is happening on the upside. That's institutional participation. They're real buyers. All right. But if the it could be capitulation, it could be exhaustion, all that stuff on the upside. It could be, but we can't get too deep into the weeds on volume right now. All right. The other thing is, if the volume was heavy on the downside, you would say, well, there's institutional participation on the sell side. So that tells you something changed in the character of what was going on here as a comparison. So all the stagnant volume tells you is that the market's in no conviction, and it's likely in float mode. In a bull market, it's going to go float up. In a bear market, you're likely to get whipsaw, but you're likely in a bear market not to get decreasing and stagnant volume. You get more volume in a bear market. So right now, this is a uptrend bullish market, regardless of where the top is going to be. Okay, it's in a bullish uptrend market, period. And that's the way you read that, volume. Now, Microsoft, there's nothing wrong with it. It's eating time off the clock to go higher. That's the concept of Microsoft. What was the other one? Tesla. This was old stuff. Okay. Now, here's what we're going to say. You clear this high at 191.58, and they'll get to 200. But that's if. What if they're running a test to this high, and they're going to get rejected back down? Then they're going to come back down to 175. If. Too many ifs. It's very, even though they're in a range from, let's just say 163 up to 218, 219, whatever that range is, or even 207, if they're in a range here, it's a big range, and you don't know which way they're going to go. That's the problem. That's the weekly chart assessment, daily chart assessment. I'm looking at this thing in real time, no prep, you just saw that in real time. That's my assessment. And without knowing what the chart looked like before I brought it up, I took my time, and that was my assessment. That's without the numbers. It's just concept assessment. Yeah, I just gave you a lesson or two out of my course, Jerome. You're right. Because nothing ever changes. I made that course a long time ago, and it 100% applies today. Doesn't matter what the prices were at the time. It's just numbers, just a chart, candlesticks. Doesn't matter. Very slow tape. Here we are again, just a reminder, S&P's up 3 points. It's not a trader's tape today, obviously. The morning rush is over. Now it's the flotilla. Yes, Damien. That's the kind of stuff I teach in there with more detail and more lessons. Just a reminder that 413.45 technically is no longer a short. That doesn't change the fact it's an important place and they may react there, but the trade is not the same. Rewire the thinking. Alter ego stuff. Just a reminder why that is. The trade is not the same. The number hasn't changed. It goes in the manner in which camp. Just the first one, Damien. You don't need the second one. Not if you're in here. Daniel, the answer is yes, but it's unlikely. And there would be a number before that anyway. So it is curious. The Qs are going the other direction. And the SMH remains weak. Not as weak as it was before, but weak. Just curious. Doesn't mean anything. It's just I'm watching and I'm noticing. Doesn't, yeah, actually, Raf, that hasn't changed. The 316.85, if they ran down there, whether or not it was at the same time as 411.90 to 411.15, for example, in the spiders, that's still an opportunity in the Qs, whether it's corresponding or not. It doesn't have to be. There is no corresponding really anything. It's just sometimes they hit at the same time. Then you say after the fact, well, that was the corresponding number. And yeah, that was true. But I don't look at it that way. That's more of a, just happens. But the point is I treat each chart independent of one another. What the fuck is that? Eric says he loves watching paint dry when the color ends up being money green. Well, I don't know what you're doing, Eric, but it is paint dry for sure. And here's another example. For those of you that still want a short 413.45 because you can't help yourself, let me explain another reason why that's not the best idea on the board. Because you're getting into that point of the day where things have even gotten quieter than they were before. And when you're in a short trade, when things are super quiet, there's an old trader adage that says never short a dull market. I didn't make that up. It just turns out to be true because it's torture. They could hang up there, they go back and forth, they push a little higher, and they just do nothing, and they go back and forth just like they've done for the first hour of the day in a different area, and it's torture. And that's another reason. Again, it's not to say they won't hit it and decline all the way back down to the pivot. I don't know that they will or they won't, but all I'm telling you is what I know to be helpful for the business of trading. And not every trade is created equal. Some trades are better than others because of how and which they got there, how they got there, period. The manner in which. Got tongue-tied. The Qs are still melting down. If the Qs were on the rise, I would say that the spiders are going to get to 413.45, but the Qs dripping away, I'm not so sure right now. I'm not so sure they just don't turn around. I don't know. I'm willing to buy it if they do. In the same place, no change. Oh, yeah, you're right, Eric. Waiting is paid off. That's the point. Patience. Back to the alter ego stuff. You want to hear something funny? So I just get this email. This is personal stuff, not like, trading stuff. So I get this email of a charge. So I have my credit card set up to notify me whenever there's a charge over a certain amount. It's not a big amount. It's just over a certain amount. I want to know about it and make sure it's legit, right? So for me, I set it at 500 bucks. Anything over 500 bucks, I need to know. My wife, she spends whatever she spends. I don't care what it is. I need to know if there's nefarious activity going on, right? So I just get a charge for well in excess of 500 bucks. Not tremendous, but in excess of 500 bucks. And I'm like, what is this? And I'm digging and then I see another email where there's a receipt for something. And here's what happened. So I have a friend of mine that's a golf pro, and he was playing in a charity event with another golf pro for the benefit of a hospital and where they are. And so he said, would you sponsor us? And the way it works is he sent a link, and the way it works is you pick a number and you can, say you'll donate $5 a birdie or $10 a birdie or whatever, or some flat amount. And I thought that was neat. And and I didn't read the thing. I just said, sure, I'll do it. And I said, all right, I'll give you guys $25 a birdie. And I'm figuring, if they make a handful of birdies, a bucket full of birdies, I'm in for a few $100. That's fine. And I'm donating to a hospital and it's fine. And so then I find out right before the event that it's a short course. It's for charity. It's fun. It's a short course, and they're playing whatever. I don't know why the number was 81, but they're playing 81 or 82 holes, and it's like a par 3 type of course. They made 51 birdies. So I said $25 a birdie. So I got taken down for like 1,300 bucks, and it's okay. But I didn't know in advance and I let it go. So I thought that was a funny story. And it's all for a good cause and I'm okay with it. But it was a surprise and it was a good surprise in a way. So that's fine. Yeah, exactly, Daniel. To direct the benefit to the local community as opposed to paying the tax. And that's what Daniel just brought up. So it's a tax break, meaning it goes against earnings, and up to a certain amount, you donate to a charity. We all know that, and I do that. And so this was part of that, and that's fine. I'd rather have a local charity, or see what I'm saying about you don't know that they're going to come down. I'd rather have a local charity get the money than the government for sure, as much as I can, so to the limit. Daniel, I appreciate you being here, and I'm not yelling at you, but you don't need to state the obvious. We got it. 411.90, 411.15 won't look like it at the time, but that's an area they should bounce back in the other direction. No change. See the cues were the tip off. Not always going to be the tip off, but today they were the tip off. That they will get there. Could be another test of the pivot. I'm just saying, but that's the trade. If they give it to us, fine. This is the mentality. This is the mindset. This is the rewiring of the brain. If they give us what we want, we're happy to take it, but we're not willing to take something we don't want. That goes for life. It's not just trading. It's just a concept of how we look at things, right? We're willing to take it if we want it, but if we don't want it, we don't take it. If you're not a gun person, a gun advocate, and somebody tries to give you a gun, you don't take it. I don't want it. I don't know why I just came up with that analogy, but that's an analogy. Here's a better one. If you're on a diet and somebody comes over with a Big Mac and fries, you don't take it. Don't get a happy trigger finger. Just let them give you what you want. All right, so they got below 412. So there, okay. So this is more like it, right? Spike of 412. They're in the zone. It's showtime. They could come lower, but it is the beginning of showtime. Enjoy the show. Be back in a minute. Gives you 3 to 4 point scalp, more potential, but you have no choice. It's not a 7-point scalp. It's a 3 to 4 point scalp. Just double check that. Okay, it's a good start. Good scalp. See how the cues didn't get to their number? Well, here we go. Forget the cues. What was the high? 411.30, 412.35. How you doing? Apples? You like them apples? All right. Let me hear it. Participants, step forward. Okay. Looks like a big swath of traders got it. You see what happens when you have patience? This is why I discuss the alter ego stuff. You just have to wait. And we're waiting to get in, and there's a whole nother truckload of traders that are itching to get out because they were wrong. And we're happy to take what they want to give us, which is their shares, their contracts, their options contracts, their ES contracts. We're taking what they're willing to give us because we want it down there. That's what happened. Nice pop. Okay, so now to give you opportunity number 2, for those that didn't want to get out the first time, you could take the scalp or you can hold it. And that's trader's choice. You could do both. Depends on how much you had. I mean, I'm not going to read out the names. It's just a swath of people. Normal suspects. And there you go. Nice secondary push. And there you have it. Nice job, Raf. Raf was waiting for a spike over the pivot to exit. He knows what he's doing. Trader's choice. I tell you what I think, and you do what you want. Now what do we got? Anything happen? Now, what'd they do? Come back to test the former breakout area? Yeah, seems like it. Funny how that works. Same stuff over and over, but never gets boring. I mean, the market could be boring doing nothing, but when they do the same stuff over and over again, it can't be boring because you can make money from it. That's what we just did. And I got left at the altar. And that's okay. By one tick, a quarter point, 2.5 cents. That's okay. I don't care because I know there's another one coming. I'm immune to missing trades. I don't care. I've missed way more trades than I've ever taken in my career, and that's normal. So it doesn't even faze me. I'm also, big part of that is I'm here for you. Okay, if I can get a whole truckload of traders in a trade and they make money and everybody's happy and they keep coming back and this is fun, that's way better for me. Way better. No FOMO, right. Gerardo, 2.8K, fantastic. Yeah, we'll see about that. Just Maybe if they come back down, new spike the low trade route, but they're, maybe. Yeah, I mean, I would say in the zone again, there's gonna be another opportunity if they come down. Is there another opportunity for a bounce within the zone? And the answer is, to Raf's question, yes. If they did, we'll deal with it if they do. Mike, I explained that whole thing before. Were you here? The whole thing about 413.45, I spent a lot of time on it. Okay, then nothing's changed. Get out of the mindset of looking for a trade. Get out of the mindset of where's the next trade? What can I do next? Get out of that mindset. Rewire your thinking. Where I am right now is had a successful trade, whether I took it or not, doesn't matter. We had a successful trade. Now we're going to let the market do its thing. If they go a run higher, I'm going to be more happy because I know there's people sitting in it. And if they come to a number later that's a shortable number, I'll let you know. But nothing's changed from 413.45 because they tried it a few times and they fell back down. If they go back up, maybe they just came down, kind of recoiled the thing, whatever the thing is, and they're going to shoot higher and run right through 413.45. And frankly, I don't know that they will or they won't, but the same rules apply to what I said before is that's no longer a short in my book for other reasons also that I also discussed before, which is the whole thing about the torture and the whole thing about when the morning rush is over. So Mike, what I want you to do is start to write this stuff down and start to read it over and over and over again, because it's really important stuff. I know what you were wondering, but I'm telling you why you shouldn't be wondering. And when you learn all the things that I just said and you start to understand them, you won't wonder anymore. That's the point I'm trying to get to. I'm helping you. I'm not hurting you. I'm not yelling at you. I'm helping you. Were any of the missed trades better to have missed? I don't know. I don't know, Don. I don't know what you mean by that. For me? Yeah, well, there's always going to be those, Don. Yeah, if I think about the question, yeah, there's always going to be those trades that, well, I'm glad I didn't get that one. But usually it's because here, they miss a number by a little bit, not a lot. And then they come back down later and you say, well, let me take it because now they got the number, and then they go a whole lot lower. Well, I didn't take it because they missed the number, so that's kind of what happens most of the time. That's the reason I would miss a trade, because they never got to the number. They never got to my number. Like, look, the number was a 411.90. I gave you 412 because I know what happens. They come up short, and I know there's going to be people that don't see the difference between 412 and 411.90, and there isn't much difference. But that's why I had the number on the board and I kept saying 412. You all got it. It's fine. You just followed along, follow instructions. Patrick, just about a G, nice. Eric, a little over a G, nice. Mike, nice. All right, so they're going to do the spike the low and rip it back up in the other direction thing, right? We don't know how low. Okay, so could it be 411.90? Yeah, but could it be 411.15? Yeah. We don't know how low, but if you are willing to buy in the zone, you're going to have to pick a number or two or three. But if they do the thing where they spike the low, there's an opportunity for a rip it back up in the other direction because it's still in the zone of support, and they only just kind of touched the front end of the zone and gave you a scalp, and that's good enough for a scalp. But the zone is still okay. Check this out. Don't know that they'll get down there, but isn't that in the zone too? And if it's in this candle, it's all the way down here. But if it's in the next candle, it moves up. The next candle, it moves up. See how that works? That's legit. I don't see it that way, Daniel. Maybe. Let me look at some other stuff. No, there's nothing. You can't have a full stack in a market that's going up and down 50 cents unless you have some kind of bull flag pattern, and it's not necessarily a full stack. It's not a full stack. This isn't a full stack. I don't think. It's just a quiet market that's up and down 50 cents. That's the way you have to think about it. That's the way I'm thinking about it. I'm not looking for any great shakes today. Mark didn't get the Whopper Jr. out of that trade, but he got the plastic toy that was in the box. That's a good one. Patrick, that's reasonable. There's nothing wrong with that. It's basically everything I just said, and it's fine. So you're following instructions. What's going on over there, Kevin? Yeah. So Kevin says he took the rest of his off already, but this is a good example of why you try and hold it. Look, they came down for a retest, but if you just did it by painting by the numbers and said, all right, I'm going to put my stop at the number or maybe a few pennies above the number and just try and let it ride or not put a stop in and just see if it just stays above. And it's hard. I know it's hard. I say it every day. It's very hard to watch what you have left. Profits get sucked away from here down to here if that happened, right? And say, oh shit, I should have sold it. But this is a good example. Thanks for bringing that up, Kevin. Because you don't know how far, you don't know if they'll fill a gap today. And if you're just sitting in this thing all day, and let's just say I'm making it up, you had 400 shares total, and you took 200 off. I'm just making up numbers, all right? And you're sitting on 200 shares, and you could write it up another 200 bucks, 200, pardon me, $2, or whatever today. I mean, all of a sudden, that's another 400 bucks. They just were sitting there doing nothing, just waiting. That's the case. It's hard, but that's the case. The only new buy range, Armand, would be the spike the low and rip it back up in the other direction thing. But they're now not doing that. We had a chance a few minutes ago, but now they're just, as long as they're above the pivot 412.35, they're bullish. That's it. It's a very slow day. I sound like Rain Man. Thank you, Patrick. I appreciate you saying that because it's 100% true. If you're going to be here, you might as well follow instruction. That's my interpretation of what you just said. You're 100% right, Kevin. That is the ideal situation. And Kevin says it's easier to do it. We're talking about holding on. It's easier to do it on the first number with only one fill. So let's just say you were willing to buy, we use easy numbers again, 200 shares and 200 shares. Let's say there was two numbers, 200 shares, 200 shares, and you only got filled on 200 and you sold 100 up here. To hold 100 is a whole lot easier than if they actually filled both numbers and you have a different trade. He's right. Because you were never really out of the money. Like this is the perfect one. You're never out of the money. So from a emotional standpoint, I think that's a big part of the reason that Kevin brings that up. I think that's the main reason is from the emotional standpoint of in the trade. It's the easiest trade to do it with. What is that, Armand? What chart are you looking at? Like hourly chart? Nah. This is, you know what this is? This is a chop shop formation. This is just nothing. That's bullish. This is eating time off the clock near the highs. But look at this spread from high to low. It looks like that on the hourly chart. And that's just a back and forth chop shop. All right. You never know about the spike the low and rip it back up in the other direction routine. So we'll keep that on the docket. Just one more. Now all of a sudden it goes from, hey, this is bullish to, hey, this is bearish, because they stay below the pivot and they're making one of these bearish flaggish kind of deals. So are they doing that to run a test of the upsloping trend line that we found over here to keep the uptrend intact, or are they going to break it and do something different? On the first hit, they should hold it. They should at least fight it for a while. And that's in the zone. So has anything changed? No. Now, I talked about FSLR before. You not here? There's no short there. Intraday, no, it's not worth it. Went over the whole chart. Where were you? Don't short FSLR. It's in an uptrend. There's better fish to fry. No, Craig, just follow what I say. But I talked about this 3 times today already. Just follow if you want to trade the cues and you want to wait for the numbers, then do that. But I can't tell you they're going to get there based on what the spider number is. We talked about that 3 times today. I'm not yelling at you. I'm just trying to make you listen. What you want to do is your own thing using part of my thing. And I'm here to tell you it's easier just to use my thing. I even said it before. I said, I don't know if the Qs will get to their number. Put blinders on and just put blinders on. I say this every day. This is part of the alter ego stuff. This is the angel on your shoulder. Put blinders on. Just do it. You'd be so much better off. When you start using part of what I do, and then part what you want to do, it's a recipe to have different results than I do and everybody else in here. Why would you do that? Forget about what you want to do. Why don't you just do what works? It's easier. Don't make it harder on yourself. You want to trade the NQ off the numbers, that's fine. But if you're waiting for the numbers to hit based on what I'm watching on the other side of the screen, then you're a derivative away from what we're actually doing. Why would you do that? So yes, the answer to your question is you're better off trading the SPY or any vehicle that tracks the SPY. I'm not yelling at you, I'm helping you. And I'm not saying you're saying I'm yelling at you, I'm just telling you in advance of what you're thinking. Well, why is he yelling at me? I'm not. I'm trying to help you. I'm trying to make you aware of things that you're doing that you don't realize you're doing. You're making it harder on yourself. I know that. You might not believe that. And that's why you keep doing it, or that you already tried to do it, whatever. No idea, Anishan. What does that have to do with, what does one thing have to do with the other? Because money will get siphoned away over to Apple, maybe? Is that what you're thinking? Maybe that's what you're thinking. I don't know. That's an interesting question. Can Apple siphon money away from banks? I don't know. I don't think that's going to be a catalyst. There you go, Craig. You'll get it. Believe me, I'm helping you. I wouldn't tell you anything that's not designed to help you. Why would I do that? There's no benefit to me or you or anybody else. All right, here's the situation. I'm going to take 3 to 5, walk around, stretch my legs, rest my eyes, and I'll be back. If they do the thing where they spike the low and rip it back up in the other direction while I'm gone, nothing's changed. Still in the zone. Now, you know what this line is. That's getting higher and higher, right? So like 2 candles from now, it's above 411.50. Right now, if they dropped it, 411.45, something like that. You see it. Be right back. Oh, Anishan, it's not today. I'm giving you a pre-thing. No, but it's a good question. I mean, that was meant to make you think. Right. I'm glad you saw it. All right, I'll be back in a few. All right, a few minutes are up. So what do we got? Any last minute questions? I'm gonna take a break. There's nothing going on. No change to the zone. No change to anything. It's just very slow. It's 11:20. I'll come back at noon after I exhaust some questions over here, if there are any, and give an update. Anybody want me to re-explain anything? I gave a lot of little lessons today. Anybody unclear on anything? Don't tell me if you are clear, just tell me if you're unclear. Yeah, I did Tesla before. 182.5, 180, it's a little wide. 184 to 182.5, that's too wide. They already bounced just in front of 184, so forget that. 183.5 to 182.5 if they did it now. That's the best I can do in Tesla. See you tomorrow, Eric. You're welcome. Well, Kevin M, the different Kevin, is asking, how do you equate the SPY numbers to the ES numbers? Well, whatever number, let's bring up the ES chart. Whatever number one is, the other is. So it's an equal number today. There's a factor. Each day it's a different spread because it's futures. So they're going to get compressed as you get closer to the expiration of the contract. That's why it's a factor each and every day. It's like 1 point something is the thing. So here's what you do. You say, all right, right now the spiders are at 412.30 and it equals 41.60, let's say 50, just for argument's sake, okay? It's moving, so just go with me on this. So if my spider number is 50 cents away, you add 5 points in the ES because each point equals 10 cents. If this is the equal number right now, 41.61 to the pivot, let's just say 60 to 61 is the pivot, 41.60 and change is the pivot, equal to the SPY. And if I say we're going to buy 411.90, okay, you're down, let's just say 5 points, just for argument's sake, say it's 5 points. That's 50 cents in the spiders is 5 points in the ES. Does that make sense? Kevin, you're welcome. See you, Patrick. Nice job. Yeah, too complicated, Anashan. Easy. I get what you're doing. You want to do it to the exact penny, and I used to do it on a spreadsheet. Each day I knew the factor, but this is the easiest thing to do. I play the ES when I trade. So I actually, sometimes I'll put in a limit order when I figure out the number. Look what happened today. I got left at the altar by a quarter of a point, right? By one tick in the ES. So sometimes what I'll do is I just hit the button. I just hit the buy button when it's at the number. I don't care if there's a quarter point slippage or whatever. It's just easier for me. And if I'm looking for 7 to 10 points on a trade, who cares? But I won't do that in a tremendously volatile market, because you will get slippage between the point in which the order goes in and the point in which you hit the button. It is a delay. It's not anything you can really notice, but if the market is really, really wild one of those days, you can get screwed. So you don't do that. You don't hit a market order on those wild days. But on a day like today, doesn't matter. There's your bearish pattern going in the other direction. See, it's just a quiet market. That light volume, you don't know what's going to happen. Anything else out there? Otherwise, I'm going to take a break. I'll be back in a half an hour or so. I'll wait one more minute. There's no storm, Daniel. Daniel, there's a storm at some point, but it's not. Here's what I want you to do, Daniel. Type in a notepad all the stuff you're going to type to me. Unless it's a question or something that you don't think I know, just hit enter on the notepad rather than in his box. All right? Make it easier on you. Don't think. You're thinking too much. You want to assume certain things are going to happen. You're looking for stuff. Calm down. You're too anxious. I'm helping you. Trust me. All right. Back in a half an hour, give or take. See what's going on. If they do the spike to low thing, it's still good. And if I see it, I'll pop back on. Now, maybe I'll stay for a minute. This is a big down candle for a 5-minute chart. Let's see what happens. I'm here. I'm just waiting. I want to see if they do this. 91. The number's 90. I'm telling you. There it goes. Okay. So technically, they're in the showtime zone again. Spike to low, rip it back up in the other direction, but they can come lower. Everybody's aware of that. Anywhere in the zone. There you go. Let's see if they test the trend line. 411.50, give or take, 60, right here. Closing candles, even 5 minutes below the trend line, will be a problem for the bull case. But that doesn't mean they can't test the lower end down near 411.15, 411.20, 25, something like that, and pop back up. But then that trend line could become short-term resistance. Just understand what's going on here. Remember, we don't get excited. Many of us are in a trade right now. We don't get hyped up. We just let them do their thing. We let them do what they do normally the large majority of the time. Sometimes it's not going to work. The majority of time it does work. Most of you have already taken a scalp off the table. Spike of 412, 412.15, that would be a good spike, a good place to book some profit. Like now. Nice trade, folks. Well done. Be back in a minute. I take profit. Another 1.8K for Gerardo. Nice job. Anashan. Sean. Yeah. Anashan. Or even in front of it. You could do this a couple more times in here. Doesn't matter, Raf. There's no only. Profit's a profit. Rewire the brain. Face it. Job, Dirk. If you're not in a trade anymore, if you took the scalp off, now you wait for him to come down here. 411 and a quarter down to 411. The 411.15, give or take. That's what you wait for next. If you got one off here and you got one off here and you're waiting, just wait. If they don't give it to you, so what? And if you didn't take profit where I said right here, and I said it beforehand, then you're still holding it, and now you have a different choice to make. You can add down there, or you can wait. This is why I say, and I said before, it's not the kind of day you're looking for a huge rip. Might get it, but it's not that kind of day. There you go. Now you're looking for a test to the underside of that upsloping trend line. That's the exit. If you bought down there, low is 21 against 25 to 15 so far. See if they can pop it on the next candle opening in like 5 seconds, like that. Upsloping trend line will be resistance. It's an exit. If you bought down there at 411.25, that's 3 or 4 points, whatever you got. 2.5, 3.5, 4, doesn't matter. Just base hits add up. I wish they were bigger, but they're not. You just go with what Mrs. Market's giving you each and every day. There it is. Just about a test. They're testing it. Okay, so traders that were long from down there, you have to take some profit. You can hold it. No reason they can't get higher, but you just have to paint by the numbers. You do what I'm telling you and you'll be okay. Make up your own rules and other stuff will happen. There you go, Daniel. Nothing wrong with that. It's called a base hit. You betcha. That's why we took profit at that test of the trend line. Make sense? Now it does. First hit is generally a rejection, which is why you take profit. There you go. Could you do it again? Yeah, they'd have to hit 415 and they'll probably spike 411 next time. But in that zone, another scalp. It's a good idea, Daniel. Now, those of you saying, oh, I should have taken profit at the trend line, like you said, you were greedy. And greed has no business in this business. Rewire the brain. You have to accept what Mrs. Market is giving you at the time she was giving you the scalp up to the trend line. Take what she gives you and just accept it. And why did I say that? Because I know there were traders that refused to take the profit. This is not enough. Well, rewire the brain. May find themselves up at 412.35 2 hours from now. I don't know that they will or they won't. But you have to manage the trade you're in, not what might happen later. We don't know what might happen later. I'll give you an example. How do I know that symmetry won't play out and find them closing this gap down here at 408 by tomorrow or this afternoon? I don't know that. Why not? Why not? We don't know. Doesn't mean there's not 10 trades in between, but we don't know. That was risky, Nick, but I understand it. You're over trading, by the way, just so you know. Even though you're right on this one, you're still over trading. I'm helping you, not hurting you. You could be right on that, Armand, and you could be wrong. You could find the market up 50 points from where it is today by Wednesday. You just don't know. This is options expiration week. Weird stuff happens. We have the inverse head and shoulders situation, and there's nothing going on here yet. Right? Could be, but there's nothing going on yet. How do you know it's not going to be a 2 or 3 day pullback and then another rally higher? You don't know. You may be right, but you may not be. And we don't necessarily care what could have happened because we don't know. This is just my thinking. It's just the way I think about things. My brain is wired the way I just described it, just so I can see both sides. Thanks, Daniel. You too. Now, those of you that have to have another trade, we'll do it again. And some of you have already signed off. Some of you have already said, I'm done. And that's good. And some of you will take another trade down here. And it probably will work. But only the folks that have to have it. Because the more times you put your chips out on the table, the closer you are to that one that's not going to work. Rewire the brain. Those are the facts. I didn't make that up. You don't have to like it, but those are the facts. I'm saying if they get down around 411.15 to a spike of 411, probably going to get a bounce there, Kevin, but I'm not. I'm saying, I don't know, maybe you were out for a while or not listening, but we just had the spike the low and rip it back up in the other direction right to the trend line. That was the trade. And here they are. So I'm saying they're still going to bounce around in here. It's a slow market, give you scalp trades, but if you don't have to have another trade, don't worry about it. And anybody that is and has a profit for the day, you never risk the full profit on the next trade. You don't do it. Not when you've got profit in your pocket and it's around lunchtime. You just don't do it. Thanks, Michael. I appreciate you saying that. You're welcome. Now is the trend line resistance? not like it was before. They may make a bearish pattern and go down more later. Remember this? We don't know that's happening or not happening. It tests the lows and then go lower. All of a sudden, it's different tape. But the trend line isn't the same resistance as it was the first hit, first time, best time. Still may be, but we don't know. By the way, we put this trend line on a chart because the market drew the trend line. Interesting how on the 15-minute chart doesn't look like they tested it, right? In a 5-minute chart they did. Funny how that works? Just noticed that. But still a valid trend line, but now they're below. Oh, I know why, because that was in the same 15-minute candle. That's why we couldn't see it. So stretch it out a little bit. So they haven't. So when you go to a 15-minute chart or probably 10, well, here they did. Just don't know what's going to happen at this point. Same conversation, Kevin. Can, and they might not. It's not a big deal trend line. It's just a short term. No, maybe not. Let's rewire that one. Maybe they're not below. Below on a short term chart, but isn't this a better trend line? I think so. Real time stuff. I didn't see that before. I should have. Now look. See the difference depending on what time frame you're looking at? The larger time frame is always going to take precedent. See, I did this before, and it worked, technically. But then when you stretch it out, look, and this worked too. Interesting. How do you like them apples? I'm glad you brought that up, Kevin, because I rewired the thing. Just wanted to double check. Yeah, it's pretty good stuff, right? I'll be right back. That seemed to work. Interesting, right? By the way, I'm going to answer a question from before, but not fully answer it, and you'll understand why in a second. People ask, where do you come up with these numbers? And there's no one answer. I don't have a formula that says, here's the number for today. But I use a lot of different things. And I'm going to give you an example of something that is mind-boggling and not anything that you should use to trade off of, because it's only, a fraction, a fractal / fraction, a very small one of the whole story. But I want to prove a point that I use numbers, okay, and how I use numbers with I create my own formulas, right? Watch this. I'm not going to do it. You'll do it on your own. If you take this low down here, that's 380.65. And then you go back to grade school and you think about, we learned pi, 3.14. Why did we learn pi? I'm never going to use that. I've never used it since. Well, guess what? I have. So if you take pi, and since everything's in a fractal of one another, all right, and I know, and you'll just take my word on this for the purposes of this conversation, that the market can be divided a lot of times in eighths. Doesn't matter why, it just is, okay? We're talking angles and things like that. This is advanced stuff. So if the market could be divided in eighths, and 1/8 of a point is basically 12.5 cents. 1/8 of 100 is 12.5 cents, okay? That's an eighth. Or if it's not an eighth, it's still 12.5 cents. It's some fraction. I think it's an eighth. But I'm using 12.5 cents for this one. If you take pi and you divide it by 12.5, you multiply it by 12.5 cents, you get some number. Not 12.5 cents, but 12.5, okay? Multiply it by 12.5, pardon me, all right? So you're taking, well, I'll do it with you now that I confused the hell out of you. All right, if you take 3.14 and I multiply it by 0.125, that's what I meant. I don't think that worked. Hold on. 3.14 multiplied by 0.125 is, no, that's not what I did. Hold on a second. Let me go back to my other chart. Hold on a second. I got something for you. I just messed it up. Bear with me. All right. So there's two things here. That's why I got confused. All right. It's even better than I thought. Okay. So here's the first thing. Okay. Check this out. All right. This low is 380. We're just going to call it 380. Forget the 65. 380. Forget 0.39. Just say it was 39, and we're going to round it to 40. Okay. We're going to take the decimal away. It's 40. Okay. 360 plus 40 is what? Is that 360 or 380? Yeah, no, it's 380. Boy, am I getting the numbers botched. I'm tired. 380 plus 40 is, I did times, is 420. 380 plus 40 is 420. Okay? 420, watch this. What's the high of this breakdown candle? 420. Huh, how do you like that? Weekly chart, same thing. High, 420. And then there's a gap at 422 that I've been talking about in the videos. Does that even register with anybody that I'm using these crazy numbers and I'm coming out with the same thing that has something to do with why the market reacted or where there's a gap or breakdown candle high, and it's just almost ridiculous. But this is just an example of some of the things I do playing around with numbers. Okay. And there was another one with the same number, and I'm going to figure it out in 1 second. I'll be right back. I just want to show you that using the same philosophy on something else. The last thing I said was, you probably didn't get, all right, so I did it before with the decimal, and I confused myself because I did it two ways. So watch this. Pi times the same fractal, okay, 1/8. And there's other fractals, but 1/8, which is 12.5 cents on a dollar, or 12.5%. I think that's the 1/8. Regardless, this is the fractal I'm using, okay? And if you just take away the decimal and I say 3.14 times 12.5, but without the decimal. So it's just say it's 125. And there's no rhyme or reason for this. I just know it works because I've done this. It's 392.50. The first bounce off the low, the high was 393.45. It's pretty darn close. Okay. I use these numbers, and it's way more than pi. I gave you a fractal example. I give you one small example. Think in terms of square roots. Think in terms of things that you learned when you were a kid that you never thought you needed, were never going to use, and now all of a sudden you come across someone that uses it every single day. All this stuff. Because the market is based in mathematics, I swear to it. And therein lies when people say, how do you come up with the numbers? There's no one formula. I use all this kind of stuff and a whole lot more. Okay, I gave you one or two things just now out of probably somewhere between 75 and 100. So there's no easy answer to how I come up with the numbers, but I use this certain things for intraday stuff over and over again because I know they work. And there's certain things that work for larger kind of moves, like when there's a significant low and they're going to bounce. You know, how do I figure out? It's not just a Fibonacci retracement. That stuff is helpful, but when everybody has the same stuff, you need something more. Yeah, Mark. Now you start thinking differently. I use all this stuff that we learned when we were a kid that you never thought you were going to ever use again, and you were all wrong. It was just a taste test. It's not anything you're going to figure out every day how I get my numbers from what I just told you. That's not going to happen. But when I put together the stuff that I teach all day, every day, and then I have this stuff, and then I use one of these calculations that I have, and it says, oh my God, it comes to the same place. And this calculation is at 411.90, and I have other 10 reasons why 412.35 to 412 is this important spot. Boom, there you have it. There's the buy for the morning, and it worked. This is what I do every day. I know who he is, Anishan. I've known him, not him, I don't know him, but I've known who he is for years. He's been around for decades. He's a cycle guy, but he hasn't been completely accurate, I don't think. I'm not really sure lately, but in the past, some stuff he gets right, some stuff he gets wrong. I used to follow him through somebody else used to send me his stuff years ago, like more than a decade ago. I don't even know he has software. Yeah, maybe it is. I don't know. I just don't know. Well, so is everybody else. And they're going to be right. Talking about a guy named Peter Eliades. Anishan brought up Peter Eliades, and he's a cycle analyst. And he's been around for a long, long time. He knows markets. He's got a service, different than mine, but service. Everybody's got a secret sauce. Interesting trend line, huh? On the spiders, right? The rework of the trend line. So now Kevin could say below this trend line, yeah, I would say you were right before. Then the market's kind of free to fall, but not yet. See that? Isn't that perfect? How many traders knew about that today? Even though we knew about this one a little late, but we knew about one right there anyway. And it worked. It worked. That's the profit from today, Eric. Nice. That's probably the morning low. Fair enough. Let me look at the chart, see if I can adjust some of the numbers for the afternoon for you. Adjusted some stuff. Okay. Resistance above, they work on the highs a day. Above, next number, natural resistance near the highs from the other day. Very simple equation. Get below the trend line and it's bearish. And that's it. This is still the pivot. No, not at all, Bruce. This style, what I have, is considered common sense market analysis. I mean, quants do different stuff than I'm doing. They're doing statistical analysis and who knows? I don't know a clue. I'm doing something different. They're not doing what I'm doing, I can tell you that. Some of them I do post. I've posted 2 of them recently, Bruce, and I think I might post this one on YouTube. What I have to do is I have to cut out the what's called word gaps or dead space, like when I'm not talking, the webinar's running, and somebody watching that on the other side, whether I send it out or it's on YouTube, or so they're not going to tolerate that. If I'm quiet for a minute or 2 or 3, that's painful to watch. So what I have to do is I have to condense it down, and it comes out to be an hour, 15 minutes. And then I posted a couple of them on YouTube just to give everybody a flavor of what's going on in here. So this one might get posted. Yeah, look at that, Armand. So talking about this low here. So we're talking about a retrace. And there you go. It's actually 75%, close to it. Or maybe I didn't get it right on the high. Are you talking? No, well, that is the way it is. I mean, I don't know what you did, but that's what happened from a retrace perspective. Or you say, oh, you're saying the other way. Hold on. You're saying from Friday's high. Oh, today's high. No, you can't do it that way. You're doing it backwards. Today's high, you don't go backwards. You go forwards. You don't go backwards. You start at Friday's low and you say, what did they retrace today from today's high? And the answer was about 75%. You might want to brush up on that. Anything else? I never took a break, so we're just going to wrap it in a few minutes here. You got the schematic. If they break this trend line, you're not a buyer at 411.15 at this point. They can go lower. If they break the trend line, it changes the tape a little bit. Okay. Last call. This is too steep, but that's too steep, but it still exists. No, it's not a great trend line because it's so steep, but it still exists. No, because, and here's the question. Do you like the Qs at 316.10? No, Raf, because I just said that I don't like this anymore, because if they break this trend line, what's to say this isn't going to just blow right through, because that's an important trend line. So I would say if the spiders are breaking this trend line, then I'm not going to be in love with 316.10. They may bounce there now and they may stay above the trend line, but if the spiders break the trend line, then the Qs are going to come down also. Just know that. You can make any case you want. If they break the trend line, you're going to be right, Armand. If they don't, you won't. CS, not BS market analysis. Common sense. Thanks, Bruce. I had to think about that one for a moment. The trend line. And there's your bounce at 316.10, which I'm not suggesting anybody should have bought that. I'm just saying it's an important number, but they break this trend line, that's not going to hold. There might be, Daniel, but the price is up here and you got to have a chart to do this. So you should have your own charts anyway. You could go to TradingView. I know what you're saying, but I don't like it bouncing around over here. So I took it off. It's just my personal preference. It bothers me. I like a clean chart, as clean as I can get it. Yeah, but I don't put the trend lines at highs and lows, Raf. So why would I want that? You mean for the fib retraces or something? Maybe. Yeah, I don't care. I don't need it. You're right. I'm so simple. I keep it simple. I don't play around with a lot of stuff. Anything more accurate on higher time frames. What does that mean? You're saying my stuff's not accurate? I know you weren't saying that. I was just teasing you. Yes, that's why I switched over to the hourly chart before to show you. I don't know, Mark. The apples are good. That trend line's shaky right now. They're hanging on it. It's just another number. If they came down now and they blew through here, they should bounce there. And if they don't, then it's the lows and then this. But this is another number. The trend line's holding. It's interesting. It's valid. Funny how that works. All that stuff. All right, folks. It's going to be a wrap today. Now I'm tired. My brain is tired. I need a break. I already had last call, so that was it. Appreciate everybody. We'll be back tomorrow in uniform, ready to go. Got some trades under the belt, small ones that's fine. I mean, you never know which day they're going to give you what, so you take what they give you. Back tomorrow in uniform, ready to go. I appreciate everybody. Enjoy the afternoon, the rest of the day, whatever you're going to do. Don't do stupid stuff, and enjoy. Thank you. Appreciate you all.